Let's consider the year-over-year numbers, and these are important. Year-over-year headline, 2.2, cooler than expected. 2.2 is the lightest going back to March.
In some good news for the Federal Reserve and Vice President Kamala Harris, inflation, as measured by the Producer Price Index, declined to 2.2% for the year ending in July. The decline is welcome news for the economy, which has been strained by the inflation. Most forecasters anticipated annual inflation would fall from 2.6% to 2.3%, so the numbers bode well for the Fed and consumers. Though, on a month-to-month basis, the Wholesale Price Index rose 0.1%. The Producer Price Index is not as closely watched as the Consumer Price Index, which is the most tracked inflation gauge. The new CPI numbers for July are set to be released on August 14th, but in June, CPI inflation fell by 0.3 points to 3%. That 3% level represented 3 straight months of disinflation. The Fed, which has raised interest rates to their highest level since the turn of the century, will also be pleased to see inflation continuing its descent toward the central bank's 2% target. Continued declines may allow the Fed to cut rates sooner than expected, which would be good news for consumers and the labor market. The likelihood of rate cuts increased greatly after the most recent employment report as well. After the lackluster jobs report, investors think the Fed will make a big cut at its next meeting in September. The economy has been the number one issue for voters' minds this election cycle, with Republicans hammering Harris for the country's too high inflation by tying her to the Biden administration's stewardship of the economy.